This video presentation is on how to calculate federal income tax. And we're going to use the tax tables that are in your textbook. These just happen to be the 2013 tax tables. You could get more recent tax tables, of course, off the IRS website. So there are two different ways to calculate federal income tax. You can either use the wage bracket method, which happens to be the easier of the two, or you can use the percentage method. You only have to use the percentage method if you have a highly paid individual, or if they're paid more on an annual basis or a daily basis. Usually the wage bracket method is going to work for most of your employees, but I'm going to show you both. So you need to know whether someone is single or married, okay? You're going to get that off of their W-4. You need to know how often they're paid, whether it be biweekly, whether it be annually, whether it be monthly, semi-monthly, things like that. You also need to know their gross pay, and you need to know the number of withholding allowances that they're going to have. Again, this is off of our W-4. So your W-4, you're going to get the single and married status and how many allowances, and then obviously you're going to know how often they're paid, and you will have already calculated their gross pay. So the first thing we're going to do, we're just going to go through a couple of examples. So in this one, we've got Nonie. Her annual salary is $40,144. She's paid biweekly, and her W-4 shows that she is married with 4 allowances. So what's her FIT withholding? Well, before we figure this out, she is paid biweekly. Okay, so that's what we know. We know that she is married, and we know that she has 4 withholding allowances. What we don't know yet is what is her biweekly gross pay. We know her annual pay, but not her biweekly pay. So let's calculate what her biweekly pay would be. So if we know her annual pay is $40,144, we can divide that by how many biweekly pay periods are in a year. That would be 26. And so therefore, her biweekly pay is going to be $1,544. Okay, so we're going to use, well, we can see, are we going to use the wage bracket or the percentage method? The wage bracket is the easiest, so what I would do is try to use the wage bracket every time, and then if you can't, if the gross pay that you're looking for is not on the wage bracket, then you're going to look at the percentage method. Okay, so let's first look at our wage bracket. So she is paid bi-weekly and she's married. So if you look back in your appendix of your book to the Appendix T, you're going to find these wage brackets. So this is on page T8, okay? And so this is a wage bracket, and notice that I've got the bi-weekly married. Notice that here they've got your wages, your gross pay, and so you are just finding the line that has the gross pay, okay? So if we're bi-weekly married and we are, our gross pay is $1,544, okay, we're going to be on this line here, okay? And then she has 4 withholding allowances. I'm going to try to zoom a little bit, but I don't know that it'll let me. There it goes. Good. All right, so we've got 1,544, okay, and so we're in this line, the third down, okay, and then we've got 4 withholding allowances. So when I zoomed, I lost a little bit of that. Hold on. Okay, so we've got, here's 0 withholding allowances, 1, 2, 3, 4. We've got 4 withholding allowances, so therefore the amount here is 63, okay? So that is how much federal income tax she needs to have taken out of her paycheck every time she's paid a biweekly gross amount of $1,544. Okay, so let's go back to our here. So we could use the wage bracket because we found it on there, and our FIT withholding is 63. One other thing I want to show you is on these wage brackets is down at the bottom. These are actually from publication 15, which is basically the employer's handbook for federal income tax, okay? And so it says if the wage is $2,700 and over, use table 2B for a married person on page 44. Also see the instructions on page 42. If you look in your textbook on page 44 and 42, it's not going to have anything to do with these federal income taxes, because this is alluding to a page 44 and a page 42 in this publication 15 from the IRS. Okay, so basically what you're going to do is, if it's 2,700 and over, you can't use the wage brackets. You've got to use the percentage method. Okay, so let's look at an example that maybe we're going to use the percentage method for. Okay, so here we've got John. He earns an annual salary of $84,400 and is paid bi-weekly. His W-4 shows married with one. So what is his FIT withholding? So he's paid bi-weekly. He is married with one withholding allowance, and we've got an annual salary of $84,400. So I don't know what his gross pay is yet for a bi-weekly pay period. So let's calculate that first. So $84,400, how many bi-weekly pay periods are there? 26, right? So therefore, his gross pay every biweekly pay period is $32,461.15. Okay, so now what we're going to do is figure out, can we use wage bracket or percentage method? Okay, so let's look and see. So he's biweekly married, and so remember, if it's 2,700 or over, we're going to use the percentage method. Okay. So the first thing we're going to do under the percentage method, this is the table for the percentage method. The first thing we're going to do is actually deduct a withholding allowance. This is something you do not have to do under the wage bracket method. Under wage bracket method, the withholding allowances have already been taken out for you. Under the percentage method, though, you do need to take these out. Okay, so basically, this is the amount of a withholding allowance in 2013 was $3,900 for a year for each withholding allowance that you have. So if someone had, excuse me, if someone had 4 withholding allowances, so say they were claiming themselves, their spouse, and their 2 children, they would actually have 4 of these 3,900s, okay, as a withholding allowance. Okay, that's what the IRS allows you to deduct from your income when you're calculating your tax that you owe them. Okay, so here what they've done is they've taken this 3,900 and divided it by 52 weeks to get a 75 withholding allowance for a week. They've divided it by 26 to get biweekly. They've divided it by 24 to get semi-monthly. They've divided it by 12 to get monthly. You get the gist, okay? And so basically, if they're a bi-weekly pay, which is our example is, and they're only claiming 1 withholding allowance, we need to deduct this $150 from each bi-weekly pay before we calculate their federal income tax, because that's what the IRS allows us to do. Okay, so we've got a withholding allowance of $150. So I'm going to come back here. Let's figure out how much our gross pay is without that withholding allowance. So $32,461.15 minus $150 withholding allowance is $3,096.15. Now, if he had had 2 withholding allowances, then what we would have done is we would have taken that 150 times 2. Okay. So, but in this case, we didn't have that, and so we just have 150, okay? So now what we're going to do is we've got this $3,096.15 number. Now we're going to go and look that up on our percentage method table. So remember, he is bi-weekly married, okay? And so now we're going to go to our percentage method. This is on page T3 in the appendix of your book. Okay, and so here I'm looking at table 2, and notice that this side is for single, this side is for married. Okay, and the number that we're looking for is $3,096.15. So we're going to find the line that number would be in, and so here it is. It's in this line, right? It's between 1,006 and 33,108. So here's our tax. The amount of income tax to withhold is $68.70 plus 15% of the excess over 1,006. So in other words, we know we've got to withhold $68.70, and then what we're going to do is we're going to calculate the rest. We've got to withhold 15% of any pay over 1,006. Okay, so first let's calculate that part, and then we'll add in the $68.70. So if we go back here, we've got $3,096.15, and I'm going to subtract out my 1,006, and that's going to give me $2,090.15. And then I'm going to multiply that by that 15%. So my excess over 1,006 is $2,090.15, and then they say that my tax rate is 15% on that. If you do the math, you get $313.52, and then I'm going to add in that $68.70. Okay, so I'm going to add in $68.70 to that. So that means that my total tax is $382.22. So that's how much federal income tax needs to be deducted from his gross pay. So we would take his $3246.15 paycheck and subtract out the $382.22. You don't subtract out this withholding allowance either, as well. You've got to, you only subtract that out when you're calculating the tax. But here we've calculated the tax, so this is the amount that comes out of his gross pay of $3246.15. Okay, let's look at our next example. Here we've got Maggie. She earns an annual salary of $336,000 and is paid monthly. You can pretty much assume that this $336,000 is a pretty highly paid employee, so it is very likely that we're going to have to use the percentage method for Maggie. Her W-4 shows married with 2 allowances. Okay, so she is paid on a monthly basis, so we need to know that too, and we know her annual salary, so we need to calculate what her gross pay is every month. So to do that, we're going to take the $336,000 divided by how many monthly pay periods are in a year? 12. So $336,000 divided by 12, we get $28,000. Okay, so I can go ahead and tell you, you've got to use percentage method for this. Okay, so she is married with 2 and she gets paid monthly. So first, if we're going to use the percentage method, we need to go to that withholding allowances. And so for monthly, we've got a withholding allowance of $325. Now that's just for 1, and how many withholding allowances does she have? 2. So let's go here, and we're going to subtract out, well, what is 325 times 2? What is that? 650. Okay, so 325 times 2 is 650. So I'm going to subtract out 650 here. I don't know why it keeps doing that, but so that's going to give me $27,350. Okay, so $27,350. Now this is the amount that I need to calculate the tax on. So let's go back to our percentage method. And again, she is monthly. Okay, so she's monthly, and her pay was $27,350. So we're down in this wage bracket, right? She's monthly and married, so we're on this side. Notice if she's monthly and single, we'd be on this side. She's monthly and married, so we are here. $27,350 is in here, so that our tax is going to be $4,159.91 plus 33% of the excess of her pay over $19,279. So really, her tax rate, if she was worried about what her tax rate is, you could tell her 33% at this point. Okay, so let's calculate her tax. So we're going to take $27,350 and subtract out that number that they told us, $19,279, and so therefore that gives us $8,071, and then we're going to multiply that by the 33%. When we do that, we get $2663.43, and then remember we have to add in this $4,159.91. So we're going to add that in, $41,59.91. And so therefore her total tax is going to be $68,23.34. Okay? So that's how you would calculate her federal income tax. Okay? Let's do another one. I think this one we're going to be back on the wage brackets. Okay? So Belinda earns a monthly salary of $3,000 and is paid bi-weekly. Her W-4 says single with 2. So what's her FIT withholding? Okay? So she's got we know her monthly salary is $3,000, but she's paid bi-weekly, and we know that she's single with 2 withholding allowances. Okay? So therefore, first what we've got to do is calculate what is her bi-weekly gross. Okay? So we know that her monthly salary is $3,000, so we need to calculate it, what's her annual salary before we calculate her biweekly. So 3,000 times 12 is going to give us an annual salary of $36,000, and then we can divide by how many biweekly pay periods are in a year to get her biweekly pay. There are 26 biweekly pay periods in a year, so I'm going to divide by 26, and I get a gross pay of $1,384.62. Okay? So here what I'm worried about, I've got to go to the biweekly single wage bracket. So let's go to there. Here it is. And the amount of pay I'm worried about is $1,384.62. Let me zoom in a little bit. Okay, so that would be in this. So, we can use the wage bracket method. And then we've got 2 withholding allowances. So this is your 0 column, 1, 2. So therefore, our total tax is going to be $134. Okay. Notice again that I did not withhold. I didn't subtract out any withholding allowance here. Okay. The withholding allowance was already factored into these numbers. Okay. So you only have to subtract out that withholding allowance if you're using the percentage method. Okay. Let's look at one more example just to make sure we got it. All right, so here we've got Fairhart. His annual salary is $485,000. Okay, we're going to use the percentage method here, obviously. He's paid semi-monthly. His W-4 says married with 4. What is his FIT withholding? So we've got what we have to know: married, 4 withholdings. He's paid semi-monthly. Okay, and so we have his annual salary. So first, let's figure out what his semi-monthly pay would be. So we're going to take $485,000. Divide by how many semi-monthly pay periods are there? 24. So therefore his gross pay every semi-monthly payday is $20,208.33. Okay? So I'll go ahead and tell you that is not on the wage bracket method. Okay? So let's look at percentage method. Well, first we've got to figure out his withholding allowance. He's got 4 withholding allowances and he's paid semi-monthly. So let's figure out how many of that is. So that would be $162.50 per withholding allowance. So we're going to take $162.50 times 4. So $162.50 times 4 gives me $650. So I'm going to subtract $650 from this. And so therefore the amount that is taxable is $19,558.33. Okay, so now let's figure out what my tax is going to be. So I'm going to go back to my percentage method table. And again, I'm semi-monthly married. Okay, so I'm going to see if I can, semi-monthly, I'm on the married side, not the single side. I'm on the married side. And so here I'm looking up $19,558.33. So that's all the way down here. Okay, I'm on the last line. So his tax is going to be $5,243.54 plus 39.6% of the excess of his pay over $19,096. So he is in the highest tax bracket, 39.6%. Okay, so let's calculate this. So we're going to take the $19,558.33, subtract out that $19,096. That's what it was, isn't it? I almost can't remember. Yeah, okay. And so then we're going to get $462.33. And we're going to multiply that by the 39.6%. When we do that, we get 183.08. And then we're going to add to that this 5,243.54 part. So 5,243.54. And if you add those two together, you should get 5,426.62. Okay, and that is how you calculate federal income tax.